fuck are you to tell me what to do? I don't give a damn if you say you disapprove. I'm gonna make my move, I'm gonna make it soon. And I'll do it cause it's what I wanna fucking do. Cause all these opinions and all these positions, they come in millions, they blocking your vision. But no, you can't listen, that shit is all fiction cause you hold the power.
Hi there. Is Michael Burry finally right? Is the recession he has foreseen several times over finally here? And of course, that would be Trump's fault.
No.
Well, let's look into it and see if there's a recession coming and if it's actually Trump's fault. And finally, what am I going to do? I still want to make money. Well, the US economy managed to navigate a very volatile 2025 and it didn't collapse. But the cumulative effects of the ongoing trade tensions and the persistent inflation keeps everybody wondering about a recession in 2026. The Fed decided to hold interest rates steady at its January policy meeting after 3 consecutive 25 basis point cuts in late 2025. That put the target range at 3.5% to around 3.75%. Meanwhile, the Trump administration's trade policies continue to create headwinds. But the Federal Reserve's latest projections paint a very resilient picture. The Fed's upgraded 2026 GDP growth forecast is around 2.3%. That's up from a previous estimate of 1.5%. However, with the unemployment rate rising to 4.4 in February and a core personal consumption expenditure PCE still sticky at 3%, this economy remains in a delicate balancing act. Economic cycles are natural and happens all the time, and investors can and need to navigate this turbulence by understanding the specific risk ahead. The midterm election years tend to be the most volatile of a presidential cycle, with the largest intra-year drawdowns averaging the highest of all 4 years. So, is 2027 going to have a recession? And how am I positioning my portfolios? While the Fed is projecting growth, 4 key threats could derail the economy in 2026. 1. Inflation. 2. Stagflation light. Maybe consumer exhaustion or the potential AI bubble. While all of these aren't necessarily recession triggers on their own, they could compound into something more serious if they collide with each other. Let's start with the tariff effect. The biggest wildcard for 2026 is government policy, specifically around trade tariffs, the national debt, and government shutdown. Through 2025, the administration's protectionist trade agenda introduced significant volatility. After a baseline and a country-specific reciprocal tariff, the Supreme Court struck down the Trump administration's use of this international emergency economic power, using the Act for Broad Tariff Actions, and this ruling in February triggered a refund claim for companies. All companies that paid the tariffs had now a new legal uncertainty. The administration, Trump, responded by calling for a 10% global tariff. This signaling that the White House intends to maintain a more protectionist posture despite the ruling. This shift has only deepened uncertainty around future trade costs for multinational firms. In its January 28 update, the Fed acknowledged that inflation remains somewhat elevated, but market-based measures anticipate 1 to 2 25 basis point rate cuts this year. If inflation continues to accelerate due to tariffs, while the job market continues to cool, the Fed could face a scenario where it's unable to cut rates to save jobs without fueling price hikes. The latter would put major pressure on consumer spending, especially for the middle to lower income consumer. Consumer exhaustion. The US consumer has been the engine of the post-pandemic economy, but the engine is showing signs of sputtering out. High interest rates throughout 2024 and 2025 have taken their toll on household balance sheets. There are cracks beneath the surface, such as rising delinquencies and slowing job growth. This could compound the effects on an already stressed consumer. The economy in 2026 faces a threat from a consumer breaking point where households exhausted by high inflation and record debt finally hits the financial wall. The potential AI bubble. This massive run-up in technology valuations, driven by artificial intelligence boom of the mid-2020s, presents a unique structural risk. If this astronomical capital expenditure by the major tech firms do not yield profitable returns soon, the market could face a severe correction. There is serious fear that the massive AI investment could lead to an asset bubble. And if this bubble bursts, or if AI productivity gains fail to materialize, and fairly quickly, it could cause de-risking or at least reassessment of the AI valuations. Meaning, a lot of investors will pull their money and put them somewhere else. A collapse in these valuations wouldn't just hurt portfolios, it could trigger a reverse wealth effect. In this scenario, a bursting AI bubble could evaporate the paper wealth that is currently propping up the high-end consumption. The impact on market sentiment would be immediate. So, will there be a recession in 2026? Well, whether you think a recession is likely depends on the narrative you believe in. The odds of a recession in 2026 represents the battle between warning signals coming from the labor market and the consumer sentiment versus a consensus that believes corporate investment and a data-driven Fed will save the day. The economy is literally moving at two speeds at the same time, with businesses and affluent households stimulating growth, fueled by AI spending and record asset prices, while the average person is increasingly anxious and financially exhausted. The outcome for next year will depend on if top-heavy spending can continue to overcome broader economic vulnerabilities. The data suggests a slowdown is very likely, but a full-blown recession, it's not necessarily on the horizon. Recent indicators show cooling momentum, yet not the kind of broad contraction typically seen ahead of a recession. The primary driver for the Fed's recent rate cuts was the softening labor market. The unemployment rate at 4.4% is historically low, but its recent rise shows the labor market isn't out of the woods yet. Jerome Powell stated after the Fed's January policy meeting that the upside risks to inflation and the downside risks to employment have diminished. However, he acknowledged there is still some tension between the mandates. Despite labor weakness, the broader economy shows resilience. The Fed's January statement noted that the economy has been expanding at a solid pace. What should you invest in if such a recession should come? Well, predicting the direction of an economy is impossible, and there are always conflicting signals. Smart investors accept the limits of prediction rather than betting on a single uncertain outcome. So the best strategy is to be prepared and not trying to predict anything. You should adjust your cash reserves to be sure you have adequate liquidity to weather an economic storm. You shouldn't drastically alter your long-term investment strategy. Cash may not be the most exciting play, but it reduces market risk and provides financial flexibility if a recession creates potential buying opportunities in 2026. You could use this opportunity to rebalance your portfolio, trimming your high-growth areas, maybe buy more attractive valuations, focusing on income-generating investment like some government-backed securities, investment-grade corporate debt, maybe some global investments, commodities, or alternatives. I myself I have transferred more and more into my dividend portfolio, and I'm currently getting around 12% in dividend yield. Certain individual stocks have also outperformed during the past 2 recessions. That could be something like Walmart or Netflix or T-Mobile. These are just 3 examples of stocks that beat the S&P 500 in both 2008 and 2020. That said, investors with long-term financial goals have another alternative as well. Simply ignore a recession and stay the course, which is mostly my strategy. I invest the same amount every month, no matter what markets do, but I also keep my emergency fund topped up, so I can manage at least 1 year of basic expenses. I like to have that security. So, what am I really doing? Well, I have just started a rather large position in a few companies that I believe have been hit more than they deserve, and none of them are part of the AI bubble. Number 1 is a Danish company called Novo Nordisk, ticker NVO. It's one of the world's largest medical companies, and they've had some really bad press in a long time. Even if their newest product, the Wegovy pill, has almost the same efficacy as Eli Lilly's pill, but Novo hasn't gotten the same press. And nobody seems to mention that Eli Lilly's have a large amount of side effects, especially when compared to almost no side effects in the Novo version. So what would you like? Almost the same weight loss, but no side effects? Or a marginal higher weight loss with a plethora of side effects? Some of them puking all the time. Well, I'll pass. That's why I believe in Novo, and I believe they will come back in the end of 2026 and be at least around $60, $62, maybe even $65 per share, which is almost 70% increase from the time I made this video. The other company I'm buying is actually not a company, it's Vanguard's fintech ETF called VFH. It's not the most optimal, but I don't want to look for single stocks and take that chance. The reason I buy this one is because of the cap on credit card interest rates that Trump proposed. See, there's that guy again. He's giving us opportunities all over the place. Firstly, the bill is only for 1 year, and we all know that any bank will make money hand over fist and nothing is going to change that. So it's a pretty sure bet when everything else is going down. My last play is accumulating more cash. I need at least 5% cash on hand to buy the dip. But more importantly, let me know in the comments, what are you doing? What are you investing in? Are you going all cash? Are you all in on some AI thing? Whatever you do, always remember the best investment you can do is in you. The more you learn, the more you earn. Bye.
I have a dream, that's all I need. I'll make it happen with some work and belief. Know what I want, so I'll take it on. I've made mistakes, but mistakes make you strong. Let's break it down for a minute. I want the crown, I'm gon' get it. You hear me loud, man, I'm winning. Yeah, Charlie Sheen will be grinning. These ladies know that I'm sinning, and this is just the beginning. I'm closing in the night inning. There ain't no point in resisting.